Hi, everybody. My name is Brian Purnell. Welcome to my financial analysis presentation on FedEx. In this presentation, I'll take on the role of breaking down the company's financial trends across multiple categories, including liquidity, efficiency, leverage, profitability, and market value, and compare them to industry benchmarks to see how FedEx stacks up. So, liquidity ratios help us understand FedEx's ability to meet short term obligations. I looked at three key ratios: the current ratio, quick ratio, and cash ratio. Over the last 4 years, FedEx's current ratio hovered around 1.5, showing that it can cover its short term liabilities. The quick ratio was slightly lower, around 1.1, due to its reliance on receivables and cash without inventory. The cash ratio was under 1.0, indicating lower immediate cash reserves compared to liabilities, which is typical for logistics firms. Compared to the industry average, FedEx is right in line with expectations, showing stable liquidity. Efficiency ratios reveal how well FedEx uses its assets to generate revenue. The asset turnover ratio has remained steady, averaging about 1.1, meaning FedEx generates $1.10 in revenue, excuse me, $1.10 in revenue per dollar of assets. The inventory turnover was high, reflecting rapid movements of goods essential for a logistics company. The days sales inventory or DSI and days sales outstanding DSO both showed slight improvement over time, suggesting FedEx is collecting receivables and managing inventory more efficiently. Compared to competitors, FedEx performs slightly better than average, especially in inventory management. Next are the leverage ratios, which show how much FedEx relies on debt. The debt to assets ratio was around 0.6, meaning 60% of FedEx's assets are financed by debt. The debt to equity ratio hovered between 1.2 and 1.5, which is moderate for the industry. One positive sign is the interest coverage ratio, which remained comfortably above 5, indicating FedEx generates more than enough income to cover its interest expenses. These numbers suggest that FedEx manages its debt responsibly, although it relies on debt more than some competitors due to heavy investment in aircraft logistics infrastructure. Profitability ratios. Profitability ratios show how much profit FedEx earns from its operations. Over the past 4 years, gross margin was fairly stable at around 25%, while operating margin slightly decreased, reflecting rising costs and economic pressures. The net profit margin dropped slightly in the last year, mostly due to inflation and fuel costs. However, the ROA, or return on assets, and ROE, return on equity, have remained strong, with ROE consistently above 15%. While profit margins dipped recently, FedEx remains profitable and continues to deliver value to shareholders. Let's move on to the market value ratios. Earnings per share has fluctuated, reaching a high in year 3 before declining slightly into year 4. The price to earnings also varied, currently below industry average, which may signal that the stock is undervalued or that investors are cautious about future growth. The market to book ratio remained under 3, consistent with logistics firms that have high asset bases. Overall, FedEx's stock is attractively priced and could offer long-term value, especially if profitability rebounds. In summary, FedEx has demonstrated financial consistency across multiple areas. Liquidity and efficiency ratios show the company is operationally strong. While profitability ratios have seen some pressure from economic conditions, they still remain solid. The leveraging profile is moderate and market ratios suggest possible upside for investors. Comparing to industry averages, FedEx is in line or slightly above in most categories. It also leaves a global footprint, infrastructure, and leadership position in logistics, give it a strong foundation moving forward. For this analysis, I use Yahoo Finance and FedEx's annual reports to gather the historical financial data, and I also enter the numbers into Excel to calculate the ratios, for each of the last 4 years. After that, I found industry averages through sources like Statista, MarketWatch, just to compare FedEx's performance. This project helped me understand how financial ratios work in real world analysis and also how to evaluate a company's health beyond just revenue. Here are my sources. Thank you. I appreciate you guys for listening, and I hope you enjoyed.